On February 24th, 2022, Russia invaded Ukraine and Western countries introduced sanctions. They had one objective: to make Russia unable to afford its aggression, whether against Ukraine or other countries. The way to do it was to hit Russia's energy sector. This began a game that continues to this day. Its outcomes affect billions of people as well as the future of Russia. In today's video, we talk with OSW analyst Filip Rudnik about how the game around Russian oil is playing out today. It's common knowledge that energy sources are the backbone of the Russian economy. However, we have to stress that the scale of Russia's dependence on oil and gas exports is truly enormous. Depending on the year, revenues from the oil and gas sector account for as much as 30 to 50% of the Russian Federation's overall budget revenues. This includes both oil and gas, and it is often gas that has taken a leading role in the sanctions debate. However, when we look at the data, it becomes clear that it's oil and fuels that are more important and account for around 2/3 of the revenue from the sector overall. That remains true even today. This means that as much as 1 in 3 rubles in the Russian budget could come from oil and fuels.
The Russian oil and gas sectors are of invaluable importance for the Russian budget and for the state itself because it translates into power. Russians, they use a metaphor of the drug addiction, that they are reliant on a resource needle, that the income generated from oil and gas sectors is like an addiction because of its revenues.
The question now is how to hit the Russian oil sector. Russia's primary customers were Western countries, including Europe. Russian oil and petroleum reached Europe in 2 ways: by sea and the Druzba pipeline. In the summer of 2022, the European Union decided on an oil and petroleum embargo. It came into force in December in the case of oil and in February this year for fuels. However, the embargo only applied to these raw materials that were transported by sea. Russian oil still flows through the Druzba pipeline for reasons that were purely pragmatic. Countries that are landlocked have difficulty buying oil from other sources, and they could not quickly enough diverge to a suitable alternative.
Because of the fact that some of the countries within the European Union are landlocked, Czech Republic, Hungary, and Slovakia, they are free to get Russian crude oil via Druzba pipeline. There is a derogation for Bulgaria because of the fact that it's not connected to the Druzba system. Bulgarians can get seaborne oil via Black Sea from Russia.
Apart from this exception, Western countries are buying much less Russian oil. Before the war, 4 million barrels a day reached Western markets. Today, it's only 500,000. Soon, it could be even less, as countries that still import Russian oil are extensively working on establishing other sources. The embargo was not the only idea on how to hit the Russian oil and fuel sector. Another one was the so-called price cap. A price cap is simply a price ceiling. Western countries have set a maximum price on the barrel of oil, which was $60. This means that if a third country, for example from Asia, wants to buy oil from Russia, it cannot be more expensive than $60. If the price is higher, Western entities will not transport or insure the transaction. Additionally, the transaction cannot be made in euros or dollars.
The price cap was a way to let the Western entities carry or provide insurance or provide a financial aid for those Western entities to carry Russian crude. Because without Western entities that are very apparent and very visible on the market, meaning like the carriers, the financial companies, insurance companies, without them, the Russian oil and fuels, it would be hard to reach out the global market. And therefore, there was a risk that the supply would be curtailed significantly. Hence, the price cap was introduced in order to let the Western entities get engaged still, despite the embargo, with the trade of the Russian oil. As I already said, because of the role of the Russian oil and Russian fuels within the global market, because of its prevalence and the pure role that it plays in the global market. Without them, if we would ban entirely the Russian oil from entering the market, then we would see, for sure, a decrease of the supply with the demand that is still on the same level. Therefore, it would result in the significant increase of the prices, which were very welcomed by Western decision makers and Western consumers.
That is why, fearing a price hike, the West has not blocked the possibility of third countries buying Russian oil using Western companies.
Russia is the third largest producer of crude oil globally. That translates into its role in the whole market. The amount of crude being sold by Russia amounts to around 11% of the whole global market.
Some countries still decide to buy oil above the price cap. Therefore, they cannot use the services of Western companies and look to other solutions. A so-called shadow fleet has been employed to transport Russian oil. These are old and inexpensive ships bought by traders with a non-Western background. These shipments often have no insurance, a risk that these brokers are willing to take with the discounted Russian oil. Countries that decide to buy oil by means of these shadow fleets still use the price cap, but as an argument in negotiations with Russians.
So the result of the sanctions of both embargo and price cap was the most apparent one, the most visible one, was the fact that the price of the Russian oil, called Urals as a benchmark, in relation to another Western benchmark, Brent, the price difference has been expanded significantly, up to $30 of the spread difference between Urals and Brent. That was the all-time high. It broke a record since we are tracking both these benchmarks. What is visible here is the fact that Russians, because of the sanctions, Russian companies had to offer a certain fixed and high discount to its own commodity, that they have to sell it because otherwise no one would have taken it. So both embargo and price cap played a role of a bargaining chip for certain buyers, for instance India and China, that they were saying, because of the sanctions regime, you have to sell it to us with a certain discount because otherwise no one would take it. Therefore, there was also this psychological aspect to it.
Russians are trying to find alternatives to Western markets. In the case of oil, as much as 80% of its July export went to China and India.
Basically, they switched one dependency onto another one. And the latter one is even more threatening for the whole structure of exports for Russia. Firstly, is because of the fact that European market is more diversified, more diverse, and there is a prospect for increase of those exports because the market is not small. But now, as they switched their supply to mostly two countries, speaking about crude oil only, about the resource, the scale of this dependency, up to 80% in some months, poses a threat that in the case if, for instance, one of those buyers would decide to reduce the imports, it would be hard to find another buyer. And right now we can see that, for instance, India's imports of Russian oil is getting reduced over time. Therefore, Russians seek to find another buyer, which might be tricky and hard for them right now.
The issue is more complicated when it comes to exporting petrol.
We can see that the supply, like the exports of fuels, of petroleum products from Russia, it is not dependent to that extent on 2-3 buyers as it is with crude oil. The Russians succeeded in finding new niches for their fuels, for instance, within African continent as well. But if we are looking at those data, at these statistics, we can see that it's subject to significant changes on month-to-month basis. For instance, like supply for Ghana, at 1 month it can reach hundreds of tons, while the next month it can be slashed by 2/3. Therefore, the whole supply of Russian fuels to new customers has a rather situational character, and it's full of fluctuations. Therefore, it's also a very unstable structure of exports. Moreover, in order to avoid a necessity to stop the refinery processes within Russia, they have to find new customers. Some of those exports are very costly for Russia because of the physical proximity of those buyers. For instance, they started to supply fuel to Brazil. Before the sanctions kicked in, these volumes were delivered to Europe. So the distance itself is much bigger. Therefore, the whole structure of delivery is economically less profitable.
Interestingly, Russian diesel is being shipped to countries that are themselves known for oil production. These are Arab countries, including the United Arab Emirates.
Some of the Gulf states, despite their position as a exporter, as a big exporter of both crude oil and fuels, they started to buy Russian fuels. And we can see a very interesting development within these countries, that they sell their own production, their own fuels to European market because they can get a bigger extra profit from European buyers, while they buy the Russian products to sell it domestically for the domestic consumption. Therefore, the discounted Russian fuel gets to the Gulf states market while they sell their own production. So they have a very twofold gain in that regard.
Despite the embargo, fuel from Russian oil could still enter the European market. This is done through the following mechanism. At the ports, Russians offer prices below the $60 price cap. The product is purchased by dedicated companies of Western origin, but registered in Hong Kong or the United Arab Emirates. These countries raise the price and sell it to Asian, Middle Eastern, or Turkish markets. And they, in turn, process the raw material, which reaches Europe in the form of fuel.
Russian crude ends up in European vehicles and indirectly, right? Because it ends up as a refined product in third countries that's being sold by those third countries to Europe. So we still have this Russian crude oil somehow in our gas tanks, right? And we can be appalled by that. But on the other hand, if we're looking at it by looking at the mere aim of the sanctions, that is what they meant to deliver, those sanctions, that we wanted to, first and foremost, decrease the Russian income from oil and gas sectors, mostly from oil, because the sanctions aim that sector. And in that regard, for the first half of the year, we succeeded.
Indeed, Russia's budget revenues from the oil and gas sector declined by 47% in the first half of the year, relative to the same period in 2022.
And okay, 2022, the last year, was a very exceptional year due to the fact that the prices of fuels, of crude oil, of gas were high. Therefore, the Russian budget had a significant amount of cash that was able to generate. Therefore, the statistics for this year for the Russian budget was so good. But if we're looking at the first half of 2023, then we can see that oil and gas sector amounted to 27% of the whole budget income for the first half of the year. And if we are comparing that with the statistics that was recorded throughout the years, then we can see that the share of the oil and gas sectors for several years like before averaged from 30 to 60% of the whole Russian budget. Therefore, we can see that for the first half of the year, the oil and gas income for the Russian budget was significantly reduced due to the sanctions and due to the fact that the sanctions succeeded in decreasing the value, the price of the Russian oil, and made it harder for Russian exporters to export it and therefore generate a revenue.
There's also another issue. The sale of fossil fuels has been a source of hard Western currency for the Russian budget. This makes it difficult to stop the devaluation of the ruble.
A part of the trade between India and Russia regarding oil, the part of those imports of Russian oil to India, Indians paid for that in rupees, for the part of it. We don't know what is the share, but still it is a problem. Because of the fact that that they receive rupees, it is hard for them to exchange it to another currency and get that currency to Russia. Every big transaction that is being made in rupees have to be approved by Indian Central Bank to exchange it to another currency. Therefore, there is an issue in this mutual trade that Russians cannot get their money for their sold crude oil. Right now, those rupees are useless for Russians because they are stuck on the Indian accounts of those Russian companies which sell the crude oil to India.
So the question is, are the sanctions working?
I think we have to describe and define the aim of the sanctions, because if we are discussing the aim of the sanctions and we want them to make the whole Russian regime collapse, then of course it is hard, even I guess impossible, to introduce such sanctions, right? But if we're looking at them considering having in mind the aim which was formulated by the decision makers, then we can see that these sanctions are a success, because the aim of the sanctions was to decrease the income of the Russian budget from oil sector, and we can see that for the first half of the year the income, the revenues were significantly reduced. Secondly, by introducing the sanctions, the West wanted to avoid a very horrific scenario that the sanctions would aggravate the situation on the global oil market, that the price would go up. Therefore, we would have to counter the inflationary pressure, and it would deteriorate the economic outlook of the West. And for the first half of the year, that goal was also achieved. However, right now, as we can see that due to the joint efforts of Saudi Arabia and Russia, since they started to reduce their supply, reduce their output, we can see that the oil price goes up. It is yet to be seen whether the sanctions would work again in those changed situation, right? Because with the Russian oil breaking the price cap, it is still uncertain whether the violations committed, for instance, by Western entities that would still carry Russian oil even if it's breaking the price cap and hold it, and the whole sanctions regime, whether those entities will be punished by the Western decision makers.
A Russian fear tactic is threatening to stop oil production. This in turn would lead to a global increase in prices.
Russians were, even before the introduction of embargo and price cap, they were threatening the West that they will introduce counter sanctions as a response to the Western efforts in curtailing the trade. Putin issued a decree that would ban transactions with certain buyers if that buyer follows the price cap. But that decree itself was a little bit pointless because of the fact that there is no legal or any other obligation that there would be even a mentioning of price cap in contracts. Therefore, it is hard to find out whether this buyer from the West or from the third countries really follows the price cap. This decree had only like a psychological character to kind of try to frighten the West that Russians have some options response to the sanctions regime imposed by the West.
A Russian fear tactic is threatening to stop oil production. This, in turn, would lead to a global increase in prices.
Cutting the production, cutting the oil output for Russia is a very risky step. Firstly, the conservation of oil wells to stop its production. It is a very dangerous thing to do, since it is hard to restore and is very costly to restore a production on an oil well that has been stopped from producing, from extracting the oil from the land. Second thing is the fact that, okay, Russians would reduce their output, therefore the price would go up globally. But because of the fact that they reduce the output, they are unable to sell the same volume of oil as they used to be, right? So they will lose on the volume, but they will gain on the price. It's hard for them to balance those two aspects. So reducing production poses a serious threat for Russia.
For Russia, it seems that there is no good way out of this situation.
Due to this budget hole that has been generated, has been an effect of the Western sanctions, Russians seek to find a way to reduce this deficit. They introduced from September changes to the so-called price dampening mechanism. It is a compensation mechanism that makes a transaction on internal market more profitable for Russian refineries, because the fact that it is more profitable and economically viable to sell fuels outside Russia, because the price is better outside Russia, Russian government compensates the difference between the internal prices and prices abroad. It serves as an incentive for Russian refineries to sell their product within the country. And since September, Russian government decided to cut the compensation by half. Therefore, it is even less profitable for Russian refineries to sell fuels within the country. And right now, we can see that because of the fact that the profits for Russian refineries are somewhere else, are beyond the country, there is a hard situation in some regions. We can see temporary deficits. There is a problem of supply of the fuels within the country. And since then, we can witness a serious discussion among Russian ranks, among Russian officials, that they discuss to introduce export quotas, that they will impose a legal obligation for Russian refineries that some of their production has to stay within the country. That reminds us, that takes us back to a Soviet-type planned economy with a serious infringement of market relations within the country. Ultimately, if Russian decision makers would follow this path even further, that forecasts a very gloom future for both Russian refineries and Russian consumers within the country as well.
Thank you for watching. You'll find the link to the commentary by Filip Rudnik in the description box. And if you enjoyed this video, please like, subscribe, and share our work. We have new stories out every week.